On this episode, I talk about tithing, cash envelopes, and I got a tax tip for you.
I go beyond the philosophy, and I give you real life application. I am Coach Nino Villa.
Hey everybody, and welcome to episode number 9 of the Ask Coach Nino Villa show. This week I received a YouTube comment on one of my old videos that I'm certain was intended to mock me. They were mocking me for donating money to my local church. And so it got me thinking about sharing once again why I do this. And the bottom line is that when I'm selfish with my money, those are the times that I'm stressed out, I have financial distress, and it's just not a happy place. But when I'm giving, and not just of my money, when I'm giving of my time and my talent, there is a sense of peace and a sense of freedom that comes with it. And so I think it's a small price to pay. And I share that in hopes to encourage everybody else to give more. You don't have to give of your money, but if you do, find a charitable organization that you trust, but also give of your time and your talent by volunteering. I think we would all agree that when you give and you've gone through that process and you look back, I think you're going to be hard-pressed to say that that was a bad experience. I think we can all agree that that's usually a very rewarding and enriching experience. And so I share that in hopes to inspire and encourage people to give more in 2017 than maybe you have in the past. And I'll take on that challenge myself as well.
Craig asks, should I save my $1,000 emergency fund in my checking account or elsewhere? Same question about sinking funds for vacation, Christmas, and a new car.
Hey Craig, thanks for the question. And the answer is really simple. Do not mix your money. It's as simple as that. 100% keep everything separate. You do not want to mix your emergency fund in with your checking account. And I would not even mix sinking funds in with your emergency fund. You want to keep everything nice and separate to keep it nice and clean. See, when you're using a cash envelope system, there is absolutely no guesswork. You know exactly what that money is for. And so I would strongly recommend that you separate everything out. And the easiest way to do that is have a checking account, which is where your income is being deposited and you're paying all your monthly bills. Then have a savings account. That's where you can store the $1,000 for your emergency fund. And everything above and beyond that, I would use cash envelope systems instead of getting into, 2, 3, 6, 9, 12 different checking and savings accounts. Don't go electronic. Just go the old-fashioned route and stuff some cash in some envelopes and clearly label what those envelopes are for and keep it nice and simple.
Bobby asks, how are the envelopes sinking funds seated and maintained? If electronic, how are the remaining balances of groceries, gas, etc. checked and enforced? If physical envelopes, are they all carried all the time?
Hey Bobby, thanks for your question, and it ties right into the question that Craig asked. And that is the first part I want to answer is go cash over electronic. Do not try to keep track of how much you have left to spend on groceries and how much you have left to spend on gasoline and how much you have left to spend on this, that, and the other by doing it electronically. That is just going to be a nightmare to try to manage. Instead, you are going to want to take cash out of the bank every pay period and stuff some envelopes. The next thing you want to ask yourself is, what are some of the categories that you're going to use cash for? Or what are some of these sinking funds going to be? And so I have a couple that I use on a regular basis, like haircuts, toiletries, groceries, and these are being funded every single pay period. And so let's take groceries, for example. If I'm grabbing $200 every pay period, which I am for groceries, and I'm putting that in the envelope, by the time the next pay period rolls around, I'm taking another $200 and putting it in the envelope, regardless of how much money is left in that envelope. So just a couple of weeks back, my wife and I were doing this, and we had about $100 left in the grocery fund when it came to the next payday. So we took $200 out of the bank and still put it in the envelope, giving us a total of $300 for groceries. And this is great for kind of the ebbs and flows when you are grocery shopping. You're going to have seasons when you're not spending as much, but then you're going to have other seasons when you're spending a little bit more for whatever reason. So that's a great way to manage those types of categories, is regardless of how much money is still in the envelope, you want to take the full amount that you've budgeted and stick it in the envelope. Now, if these were sinking funds, it would be very much the same thing. Let's say you had an envelope and instead of groceries, it said tires, right? Because you're going to replace the tires on your car. Well, take the cash out every pay period, stuff it in the envelope, and save it over the period of time that you've predetermined to then go and purchase those tires. Let's say it's a vacation fund and you know that you're going to be funding it for 6 months. Well, again, just grab an envelope, write vacation on it, and just stuff the cash in the envelope throughout that 6 months. The nice thing about that is you could dip into it as needed to make certain purchases for the vacation along the way, maybe a car rental or airfare or whatever the case may be there. In both of those cases, you're going to leave those cash envelopes at home. There's absolutely no reason for you to carry those with you. But as far as your grocery envelope, well, you're going to probably have that on you at all times, because what you don't want to get into the habit of doing is heading off to the grocery store and not having that envelope with you. And then you're at the grocery store and you decide for convenience sake, you're just going to swipe the debit or credit card instead. Don't get into that habit. Make sure it's always on you. And here's a little bonus for you. So earlier I said use cash envelopes for everything instead of multiple checking and savings accounts. There is one particular category that I would recommend you have a second separate checking account for with a separate debit card linked to it. It's something that I recommend. It's something I actually practice. And that second checking account is for gasoline, or I like to call it gasoline, oil, and maintenance. And so here's what happens with that. First, by having a separate checking account with a separate debit card, you can use the card at the pump, right? And so my wife and I, we have 2 young kids. When we're pumping gas, we don't want to have to get them out of the car to go inside to prepay with cash. We'd much rather use a card at the pump for convenience sake. There might be a ton of other reasons why you want to use the card at the pump for convenience. But here's what happens is every pay period, that second checking account is getting money deposited into it. For us, we budget $100 every pay period. It comes out to $200 a month. So over the course of the month, we funded that envelope, that electronic envelope, with $200. But in the course of a month, maybe we spend somewhere between $60 and $70 on gasoline. So I do that on purpose, right? I do that so that there is a balance left over. And excuse me, we spend about $60 every pay period on gasoline, so about $120 a month. So this leaves us $80 as a difference, right? I put $200 in, I only spent $120, and so that $80 just continues to sit in there, and I continue to dump the full $100 every pay period. So what happens over the course of 3 months? Over the course of 3 months, I have somewhere between $200 to $250 some odd dollars, and every 3 months I need an oil change. Well, now I already have the money for it. It's already in that gas, oil, and maintenance account, and so I can just swipe the debit card when I'm getting the oil change. And at this rate, with the car that we have being at 160,000 miles, every time I go, I'm not only getting an oil change, I'm usually getting some additional service as well. And so having $200 plus in that account at that time, above and beyond what I need for gasoline, makes it very easy to go and get the oil change and get any additional services that I need done without having to write in a different line item for those expenses. Instead, I just overly pack the envelope, but in this case, an electronic envelope, so that I have that money later to easily get the things that I need done to the car. So I hope that you enjoy that little bonus tip.
Levi asks, can I use my tithe to secretly bless others rather than to the church while on baby step number 2? It brings me more joy this way.
Hey Levi, this is another great question about tithing. So first and foremost, tithing is not a salvation issue. You are not going to have more or less of God's saving grace because you did or didn't tithe to a church. But as coming from somebody who has actually experienced seasons when I tithed to the church and other seasons when I was just giving where I saw fit, I really wanted to address this question because I thought maybe I could be helpful in one way or another. So first, in 2016, there were a couple of times we did not write a check to the church and instead used that money to bless people in other ways. So one instance, we were helping a teen on a mission trip to Africa, and in the other case, we were using money that we would have been tithing. We brought it home instead, and we blessed people around us during Christmas time. And so we found a family that we could be a secret Santa to, and we made sure that we were tipping people above and beyond what we would normally do, just to be generous at that time of year. And so we've done that where, like I said, in 2016, we're normally writing a tithe check to the church, but there was a couple of times that we didn't and instead reallocated those giving dollars in other ways because, like you, we get a great sense of satisfaction and joy out of seeing a direct impact of our giving. But that leads me to the other part of this. The other part is I've done seasons where I completely 100% was not writing a check to the church. And what I just realized is, one, when I was doing that and I was not writing the check to the church, but instead I was trying to use that money to bless people where I saw opportunity, I noticed that I wasn't giving nearly as much. And that's not a big deal, but I felt like, well, I have all of this money and I'm not finding enough opportunities to give. And so I really kind of wrestled with that for a little while. And so what I had determined is that when I pool my money together with other people by writing a check to the church, that those dollars can go farther and reach more people than they would have been able to if I was trying to manage them myself. And so I was also able to see a direct impact there as well. I can see that the church is out in the community and we're feeding hungry people and we're providing for people in need and we're giving counseling to those that need it. And so I decided to tithe to this church because I see this church out in the community providing for the people who need it most. And so I hope that helps you to continue to wrestle with the question yourself, whether you should be tithing to a church or tithing on your own accord or some blend of both. But giving is giving and giving is good. But sometimes when you take a step back and you look at the bigger picture, you realize that if I can give to an organization that is pooling resources together, that organization has a much farther reach than I could get those dollars to ever go on my own.
It's time for Coach's Tip of the Week.
All right, it's time for Coach's Tip of the Week. And this week's tip is all about taxes. So as we are all sitting and anxiously awaiting our W-2s to arrive, I want to draw your attention to your W-4s. So a couple of years ago, I made a decision to change how many allowances I was claiming on my W-4s based off of some things that I had read and some things that I heard about bringing some of that tax money home. And so this is for anybody who normally gets a large tax return. If you get a large tax return every year, it means that you're sending way more money to the government than you're supposed to or that you need to. And so why not bring that money back home to you with your income so that it can contribute to your budget and to your debt snowball. And so a couple of years ago, I adjusted my allowances. Now, allowances are not the same as deductions. I think we all kind of think, oh, I claim on my W-4 whatever my deductions are. So if I have 4 deductions, I claim 4 and magically everything is great. And that's not the case. You actually can claim more allowances than you have deductions and it'll all work out. So for me, in my situation, this might be different for you, I adjusted my W-4 to claim 9 allowances. So there's me and my wife, our 2 kids. My wife doesn't work, I work, and of course the kids are 6 and 2, so they're dependents. And so I think I used the word deductions earlier, and I meant dependents. So I have 2 dependents, but that's not the same as allowances. Dependents and allowances are not the same thing, not deductions. Dependents and allowances, not the same thing. So instead of just claiming 2, 3, or 4 allowances on my W-4s, I actually went up to 9. And by doing so, I got about $250, I think it was, per paycheck back in my paycheck. That's $500 a month. But what does that mean? It means that I wasn't sending off as many taxes to the government, and so I no longer got a very large return, which I'm okay with, because I'll bring that money home every single month and use it the way I see fit. And so at the end of the year, so that was we made that change in 2015, and so when we did our 2015 taxes, not 2016, 2015, when we did our 2015 taxes, I actually still got a return. It was much, much smaller. It was only a couple of $100, but by increasing the allowances up to 9, we've got $500 per month coming home with us. Plus, we still got a small little refund at the end. So we didn't owe. That was the good news, right? We didn't owe taxes by making this adjustment. This adjustment. So what I want you to do is I want you to jump onto irs.gov. On there, they have an allowance calculator, and check it out. Plug in all of your information and see how many allowances that the government says that you could claim and still not owe them money. And then you might, for me, they said 9 and I took 9. For you, they might say 9 and maybe you go from 4 to 7. You're still going to get more money back and you're still probably going to get a return. I can't guarantee that, of course. It's going to be based on your income and how many dependents you have and all that other stuff that you got going on. But it's worth looking into. So while you're highly anticipating the arrival of your W-2s, I would encourage you to go and check out your W-4s, see what's going on with those. How many allowances are you claiming? Go to the IRS website and see how many allowances you could be claiming and maybe make an adjustment and maybe bring home some more of your hard-earned money every single month. That does it for another episode of the Ask Coach Nino Villa Show. I want to thank Bobby, Levi, and Craig for their questions this week, and I want to encourage you to submit your questions so I can answer it on an upcoming episode.